Now, just as of recently as one does, I was researching some ultra high yielding ETFs and I came across a little niche community of a bunch of investors that were doing something very specific. Now, when I'm talking about ultra high yielding ETFs, I'm talking about names like MSTY, names like TSLY, names that yield 20, 30, 40, or 100% plus. Now, a lot of these income investors have this interesting take on these sort of investments. And honestly, when one of the investors explained it to me, I thought it was too good to pass up. And even if they don't really want me sharing this information, I decided to share it with all of you guys anyways in today's video. Now, this strategy is unique. It's a little bit risky at first maybe, but later on the strategy offers zero potential risk and massive exposure to income generation. So if you're a dividend investor and or income focused investor, I promise you if nothing else, you'll find this very fascinating. So with that all being said, drop a like down below, subscribe, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now again, just to be very clear and so that we're all on the exact same page here, when I'm talking about ultra high yielding ETFs, I'm talking about names like the YieldMax ETFs, for example. There's many different providers these days that do offer exposure to different ETF and strategies that might yield or distribute, say, 30, 130, or 78% on a yearly basis. Now, these ETFs are able to distribute so much income because of the underlying strategy. They basically gain exposure to an underlying stock, say PayPal or Square, for example, different stocks that are generally very volatile. And then by doing so, they're able to write calls and earn a massive amount of income. And although some of these names over time have decayed, and they definitely all have their pros and cons, there's an interesting strategy that, like I said, I sort of ran into and started talking about with an income focused investor that is currently exploiting it like crazy. Now, to get right into it, the strategy is basically called the house money strategy. And a lot of these income focused investors have been talking about it as of recently. Maybe you guys even yourself have heard about it, but the idea is that you buy into a name like MSTY, the YieldMax MSTR option income strategy ETF, that, let's be real here, does have a high degree of risk. I mean, the second sentence on the YieldMax website literally says, investing in this fund involves a high degree of risk. This is not a typical index fund. This is not the S&P 500. This is not a savings account. I mean, this ETF has a distribution rate of 130%, which means in theory, based off of the previous distributions at least, it would take an investor, say, 3/4 of a year in order for them to have their entire initial investment paid off. Now, looking into some of the distributions for MSTY, for example, we're talking $2 per share per month, $2.20 plus per share per month. And then a few months back when Bitcoin and crypto was extremely volatile, we're talking $4 per share per month. Now, as of filming this video, MSTY, again, just for an example, I'm using this ETF for an example, but this goes across multiple different ETFs. MSTY, as of right now, is currently trading at $20 more or less per share. Now, if we look at the dividends over the last year or so, we're talking a 158% dividend yield, and $31.81 was paid out over the last year. So by now, you're probably catching on to exactly what I'm going to explain. Some of these income-focused investors were explaining that they buy into these names, or like NVDY, or even TSLY, the YieldMax Tesla Option Income Strategy ETF, which again all have their own degree of risk, and some of these different ultra yielders have decayed like crazy, and some others haven't really decayed all that bad whatsoever. But again, follow me here. They buy into these names and hold onto them for, say, 6 months, 7 months, 8 months. So these investors were explaining to me that they buy into these ultra high yielders that do pay, say, north of 100% yield, like MSTY, for example, 158% yield. Then they explained to me that by buying into names like these, because they do pay so much income, we're talking once again, you're going to have your entire investment paid off, in theory at least based off of previous numbers, in like 6, 7, or 8, 9 months. And the reality is that there's multiple investors now out there that bought into MSTY, for example, or even TSLY, like I bought into early on, for example, that even though us investors aren't necessarily up right now as far as price return goes, the amount of income that's been paid out since inception has not only been decent, but for some investors has completely paid off their initial investment in a very short amount of time. Now that's where the house money strategy sort of started. Now at that point, an investor, let's say that bought MSTY a while ago, and now is at a 100% return as far as cost basis goes, if you use all the distributions that have been paid to them since inception. An investor that buys MSTY, for example, let's say MSTY was $20 per share, and if over the next, say, 6, 7, 8, 9 months, they receive $20 in distributions, well, their entire investment is now paid off, and now every single month from here on out, whether MSTY pays a penny in distributions per month or pays $4 or $5, whatever the case might be, you are 100% in the green playing with the house's money. Now, I found this strategy fascinating because there's actually multiple investors out there that are bought into a lot of these different names that for whatever reason have held on them through the ups and downs and now are 100% in the green and earning distributions on an investment that's been completely paid off. Now, I know it's sort of hard to compare this to like a rental property, but if you buy a rental property for $300,000 and you earn rent every single month, it's going to take you years and years and years, maybe decades, to the point to where the distributions and or the rental income could in theory pay off your rental property. Now, again, just because this strategy exists and just because there's different investors out there sort of exploiting this strategy does not mean that it doesn't involve a high degree of risk. Once again, all these names, in my opinion, are almost too risky to even touch whatsoever, in my opinion. But the fact that different investors were talking about the house money strategy, I had to go back and look at my TSLY shares that I bought a long time ago. I bought a few hundred shares of TSLY basically right when it first started trading. And the crazy thing about that is doing the math on TSLY's annual dividend payouts now and how much this ETF has paid out since inception, I personally am only a few months away as of right now on my 250 or so shares of TSLY and until I'm completely playing with the house's money. So yes, TSLY has decayed like crazy over time. They've done a reverse split. I know this ETF has not been the prettiest on the max time frame, but the reality is that just in a short amount of time, this investment actually has almost paid me back every single dollar I put into it initially. And again, not saying that it's going to do so for sure, but I'm assuming it's going to keep paying some sort of distributions for a long time to come. So the idea of buying into these ultra high yielders that might decay over time, might cut their distributions and are extremely volatile, and basically holding on to them for long enough until your entire investment is paid off and you're only sitting on the house's money and you're earning distributions every single month based on an asset that you don't even basically have a single penny inside of anymore. That strategy was more than interesting to me and has me thinking a lot about how to sort of think about and or utilize ultra high yielding ETFs across the market to maybe dabble in myself. So now that we talked about one of the most interesting newer strategies I've been hearing a ton of income investors chatting about as of recently, talking about using the house money strategy, buying into ultra high yielding ETFs that might grow, might drop, but at least in theory can pay you completely back and then some in a short amount of time. I lastly, most importantly, have a question for you guys down below. If throughout your portfolio you have any stocks or ETFs that have already paid you back completely, and now you're earning money basically from an asset you have nothing left inside of, comment down below some names that you've done this with. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.